Hello guys, glad to have you on board again. Today we're supposed to make an intraday video, but the conclusion is that it's hardly going to be the case, even though I'm going to try putting myself ahead of that dangerous exercise. But let's clear up the cryptocurrencies first in just a minute. Obviously nothing new in here, we still have that positive bias. And the only new element we have since then is in an 8-hour chart. That kind of makes sense, and I still tend to believe that the next stop will be into this resistant context in here, as we're trading and trying and to reverse, and we actually did reverse this trend channel in here, so probably just wave 1, very long wave 2, and about to make wave 3, heading into that context and probably pushing through this one. As you know, our cryptocurrencies generally have a trend, and a fancy trend to just FOMO trade on the final impulse. The other technical I'll be just highlighting in here is this thing. Remind you what this actually is about. Those signal just tells you one thing. These are no targets you're heading to. It's just targets that gives you an additional information to give some kind of polarization to ranges. So we're definitely ranging in here, but basically what it says and what that pattern means, it's basically built this way. First thing first, we get in here, okay, sine wave is broken, so we're breaking cycles, therefore framework is detecting this as it has sine waves algorithm in this one right now. Remember that sine wave got splitted. The sine wave breakouts are now detected by framework, and the sine wave patterns are detected by framework, by momentum. So anyway, so this just means, okay, we've got a first break into cycles, but that's something that can happen pretty often, and moreover, it's pretty hard to make a difference between range breakouts and trend breakouts. So this is why this information is, sorry about that, is built and displayed for. It's just to help you assessing the difference between trending situations and ranging, pure ranging situation. What it says is that, okay, we're ranging, we definitely, but we have early signs of a forthcoming trend. At least it's just balance the odds slightly more in the bullish favor in here, as this target is set on top of prices. Consider this as acting like magnets. All it says is that we've broken sine wave 1 time and 2 times in a row. So we fucked up the bears twice, and fuck them 1 time is really common. Fuck them 2 times in a row doesn't really make sense. It happens a lot, but it just gives a bias to this market. And it's definitely what that pattern is trying to search and seek for. So what we had in here is the 2nd time in a row, that pattern. So anytime we're ranging, we have bullish biases emerging out of them. So it's definitely that this market is building fucking supports. Reach out for this. Remember what this pattern tells. Coming right off the manual, and the PDF manual is currently being translated to English thanks to a lot of users who's been showing themselves. Really thank you a lot, guys. You've been way too many showing up, and I was so surprised that so many of you were ready to help. So really thank you from the bottom of my heart. Really never expected so many people will show up, and I really appreciated that. So that being said, okay, what that pattern says is that when we have that, you can consider the previous bottom or previous top on the opposite side to be probably a major top, in which you can set stop losses, protective stop losses below. So if you're trading 8-hour chart time frame, what it says is that you could have been setting a stop loss below that level. Normally it was safe to hold. Now that we have this, it basically says the same thing about that bottom. It means we can early trending, early signaling. It's very anticipative trading that we're doing in here, but we've got decent odds to figure out that this bottom can be considered being validated. So we do now finally fucking have rising bottoms. What the hell is going to happen for the resistance? I still tend to believe that we're going to rise as well. So still a positive bias. I'm not going to say a lot more than that. That's basically what I came up with already a few days ago. So it's just all the technicals right now are giving positive bias, even though we're still having a lot of bears emerging out of nowhere in the social networks, thinking that it is not rational to rise again, that the market will probably trap the bulls once again with a nasty lower shadow candle and everything like that. Yes, that's possible. Short-term breakdowns, so just try to take down stop losses. But god damn it, all the technicals for now are just switching bullish. Why the hell are you switching bearish? I don't really get that, but that's how the human mind is built. I mean, after searching for buying the dip for so long, you got the same guys now saying it's not going to happen, and we're going to have to chase lower prices. I mean, god damn it, at some point, switchers just really drive me crazy. Get the hell out of here. If you are a switcher, you're just going to lose money. So aside from cryptocurrencies, going back to major asset classes, it's still a big mess in the crypto in the forex market. Hard to define clear directions. The yen is still trying to consolidate, and we're heading toward very interesting support, which means daily chart is now about to reach its context. The 4-hour context is down the road in here. All right. Alright, so we're into 4-hour chart context, definitely looking at buying entries in here. I'm going to put an alert just right now. So I want momentum, bullish OK signal with a candle close, bullish signal on GXY, reinforce yen pairs. Alright, so I'll definitely put an additional reinforcement on yen pairs whenever we reach out to a 4-hour signal. After testing that low, obviously. I want this level tested first. Normally we should react in context, or if we do slip below context, it should be really short term, but as you can see, we're trading sorry about that. We're trading Fibonacci retracement level, so I definitely think that the yen is just going to be bought pretty early. Okay, so buying the yen definitely is something that's going to be interesting in the next following days. Just requires a signal, as we said, but I'm definitely going to put this one in surveillance. Even though the asset cannot be traded, I remind you that you can just, at least from what I have, I cannot trade the yen index. Definitely has to put some reinforcement. NZD yen, CAD yen definitely going to be the most interesting ones. USD JPY could be as well, because the dollar index is showing some really interesting signs. This was yesterday anticipated signal. I said I was looking for a signal in that area, and as we had a sine wave breakout target, I said if we go in here, I'm definitely taking the trade eyes closed. That's what we've done, and we're just trying a little excessive trading earlier today. Overbought pattern, right in context, and just to put some perspective to this trade, this is the trend line that we're talking about. It's definitely a huge one, and if you even contextualize that trade in the monthly chart, just so you guys have some perspective, what we're trading right now is probably just the last pullback before some kind of drop like that in the dollar. So I still pretty much expect that everybody is just doing it all wrong, because so many guys think the dollar is the safe haven, that this is where you need to put your money and everything like that. Future will tell, but I don't really think it that way. Moreover, I'm thinking it very much bearish, just to pay for the Trump stupidness with its tax plan. It's basically going to just kill incomes for the US economy, and if it's just turned down to be recessive economy as well, just like all other worldwide economies, then basically you've got fewer incomes, both from the taxes and the economy's return. I mean, the spendings and usual government incomes. Plus, if it managed for some reasons to find the funds to build its fucking wall, then it's just the context for a breakdown in dollar. Basically, it's going to spend a lot of dollars trying to build a stupid wall is never going to be able to handle in the long run regarding how much this thing will cost, because it's not just about building the wall, it's also about maintaining the wall. The maintaining costs are going to be enormous as well in there. And if you just want to have information about that, I strongly suggest you guys have a look at John Oliver's coverage of that topic. It was really, really interesting. So obviously John Oliver doesn't really like Donald Trump, so it definitely has some kind of bias in this analysis. But even though the technicals used in this forecast are definitely right, and I suggest you guys have a look at that just for the information purposes. So if we do fail in here, and if we do have that bearish context on the dollar, then you can be really, really sure that this is going to be pretty nasty for the US afterwards, because if we do have bearish markets and bearish dollar, it's definitely that we're strongly reverse our positioning to that market. For now, everybody think that, okay, the rest of the world is pretty much balanced. The Chinese are recessive kind of trading, because for them, trading just having below 6% growth is just basically the equivalent of a recession elsewhere. So Chinese is really in a difficult position. We definitely found this out for a couple years already. The euro area is causing some concern as well right now, as if for some reasons Germany doesn't show up some major changes in the economic policies, then we might expect some problems as well in here, and the technicals are already downgrading the valuations as well. So we've got bearish technicals with a bearish positioning from the macroeconomic projections. So either we got a strong change in here, and this is the reason why I'm selling the bunds, because I think that change can come from Germany. If it happens, and the technicals may suggest that way, and obviously, as I said, Goldman Sachs is also probably trading this way as well, leading me to believe that, I don't know, but something may just happen in the forthcoming weeks and months with the German government. They're pretty much down the corner right now, and they have to pick a decision. It's hard to say what they're going to do. Either they're just going to keep on doing the same old stuff, and in that perspective, definitely recession trades will show up as well. And on the opposite side, they also have the opportunity to use their monetary excessive supplies to spend some money. Just basically, that's the only option they have to try to push back recession early signals. And if they do spend more money, which they weren't used to do for the last decade, then it might just change the game a lot. It could cause some rebounds from the DAX, but it will obviously call a crash down prices of the BUND. This is the reason why I'm selling DAX and selling BUND, because I can be right on both. And I can be right, and I can be wrong on just one of those two, but probably cannot be wrong on both of them. So it's just kind of a cover scenario in here, just to make sure I'm going to be in the right one, even though I still don't know which one is actually going to be the right one. And it could actually be just the two. We can have a falling DAX and a falling BUND, and in that perspective, I'm going to make a shitload of money. So dollar is definitely very, very interesting, but this trade is now in since yesterday. I'm just monitoring the current price action on the nearby area to see if this trade requires a management or not. Obviously, this is a wave 2 kind of trade, which means I have a stop loss on top of the previous resistances. If it fails, I'm definitely out. That's pretty much almost it. No, we got to talk about electronic arts. Oh, God damn it with that shit. I said yesterday, please don't sell this, as we have a very strong momentum at the market open, and we definitely had back then. I mean, remember, if we just put that in perspective, I mean, just use the replay function, you'll see what I mean. You can't just sell something like that. This is where we were yesterday. I said, okay, God damn it, we've got this. We're probably going to reach out to this area, and I'm pretty curious to see how we will do it. And this is what happened. Basically, we've been opening up, gap up, buying instantly, first hour, second hour, and straight line to the target. How the hell do you want to sell something like that? It's not possible. We've got no signals, we've got nothing to trade. It's just the end of a cycle, so sine wave said okay, but definitely not something you want to be selling. It makes no sense. It's way too aggressive, selling something that goes straight line to the target. So I decided not to trade, even though this is exactly what's been happening. I decided not to get in, but the market did, and the market reversed all day long. We basically closed below the open, so the daily chart really looks ugly as hell as we tried a gap, made an open shadow candle, and fucked the gap on the same day. So we definitely found a resistance. To be honest, from the market top to the close, it's a minus 9 to 10%. It's really enormous. It's just the exact same thing I should have traded. It just got to happen in a single day. What I would have done if I got to sell in here was just to sell and profit take at the gap to secure the gains and pay for the stop loss. Now obviously this is all over. I just can't do anymore, so I'm not trying to sell again. I'll see if I have some excessive pricing trades, some kind of a wave 4 pullback in here, pullbacking, and then wave 5 pushing with divergent structures might be kind of a sell signal. that can be considered low risk taking, but still it will be very aggressive. I mean, regarding the way we've been reaching out to that first target, I very well expect that we're going to go to the second one later on, kind of digesting in here for a bit before showing another set of 2 waves to the upside, and basically having a 4-wave count. So 1, 2, I expect 3 to 4 before actually getting to sell. So being a little bit more patient on electronic arts, still being overwatched on this one. So I keep this one in a watch list, but pretty much I expect some delays before taking the actual entry on this one. Boeing as well is showing some interesting things. Same thing in here, we've been gapping up, trying to push, failed, and closing at the low, filling the gap and closing below yesterday's close. So we made a lower close, all right? That's really important. So we definitely have something happening in this area. Still no signals to trade, so I really recommend you guys stick with what I said yesterday, patience and respecting the strategy in this area. Wait for the range to build itself. We're still having a positive context, which means bullish context and bearish trend channel, kind of showing some sideways activity, and you don't want to be caught in there. So at least wait for interesting prices is what I would say, and I'm definitely going to put an alert on this level. And if we get up here upon signal only, that could be interesting to try selling that thing. Very low leverage once again. We're trying to catch up on a very nasty price bubble. So obviously if it bursts, huge gains to be expected, but therefore a high level of risk is associated. And I remind you that I thought I've been clear saying that yesterday, but I had to say that once again. Any beginner in here, so anybody who's just have less than 3 years of trading day-to-day basis, you just get the hell out of here. You don't trade this kind of stuff. Professional stuff only, or experienced traders as at least. That's pretty much it for today. So I'm going to leave you guys with that. Oh god damn it, AUDNZD is waking up. So great, alright, still not a one battle in here. I still remind you that whatever the fuck happens in there just makes no sense as long as we don't break up this level. So I still tend to believe that what we're having in front of us today keeps on giving quite a bullish bias in here, as we now have a strong head and shoulder structure in here, and the market tends to kind of will like to validate that. So we'll see if that really happens, but I still tend to suggest the odds are really favoring this to play its game. So this is the head and shoulder pattern we have. So about that, so yes, definitely what we're having. So you can see the neckline is pretty much in here, waiting for this to play its game, but we definitely have something viable. If this thing validates, then we have a target, probably I would say 1.06 next volume area, and at that stage we'll have another set I think of head and shoulder, because we've got this short-term head and shoulder, and we've got this major one in here that's going to be played head, shoulder, head, and probably we can consider this being closed in here, or eventually another set. But as you can see, all we have in here is suggesting pretty much a bearish exhaustion in this area, and where I decided to trigger my stop loss ended up being a fucking trap. But that's how it is. It was hard to say back then. So bye guys, trade safe. Remember that today is probably going to be another set of range day for the US. Kind of some assets goes up, some assets goes down, so basically a sideways action to be expected in here. Kind of a triangle formation or anything like that could be possible. It's a damn range, so whoever the fuck will be too aggressive in here would just be proven wrong. So trade safe, very low leverage, and trade volatility, which means on an intraday basis, for those who do make intraday trades only, the only goal in here is if you're too aggressive, you're going to end up fucked. If you are cautious and trade excessive pricings, which means trade breakouts, but breakouts ahead or aside from the context. So you wait for something you wait for the market to break in here, okay? You want to take down someone else's stops. You want to be trading someone else's losses. So wait for the dumbs to trade, wait for them to be panicking, to be stop lost, and take the opposite direction when you see such thing. So I would say that divergence, probably a lot of dumb traders have been trading this, so you just let them do, all right? They're probably going to be stop lossed if we rise another set of waves, and anytime we do that, you're probably going to have a sine wave breakup target, which means if it happens, we'll break the cycles. Therefore, sine wave will detect that change in cycles, and therefore you're going to have a target, just like that. But this one is going to be away from context, and it's definitely the kind of targets you want to sell just eyes closed. So if you've got a target showing up in here on top of the bearish context, got the hell selling this thing, put a large stop loss, and just let it go, all right? But this is the only condition you want to buy. Wait for really interesting prices. You know the bulls are very aggressive, so wait for them to take too much risk. When they do, you reverse them and take their losses. All right, see you tomorrow, guys.